Okay, Marco, we have you live. So whenever,
Morning.
morning, Luis, whenever you're ready, just feel free to let us know and then we'll start.
Okay. Hi, Luis. So I'm ready.
Perfect. Good morning, everyone. Thank you for joining us today. We have Marco Gonzalez giving us a quick webinar on the Corporate Transparency Act. So please feel free to drop your questions on our Facebook Live post. We are recording this webinar and we will also be sharing it with everyone via an e-blast. So Marco, thank you so much for joining us this morning. Please feel free to start right away. Thanks.
Thank you, Daniela, and good morning, everyone. My name is Marco Gonzalez, and I am a partner with the law firm of Outside General Counsel Solution, and we help our clients manage their risk every day. I'm also the Outside General Counsel for the Statewide Hispanic Chamber of Commerce, and today we're going to talk about the Federal Corporate Transparency Act. And I'll get into that a little bit later in more detail. But the focus of this statute is its applicability to most small and mid-cap privately held companies. And there's a reporting obligation that's due in January of next year. And so a lot of people in New Jersey and throughout the region who have small businesses are really not aware of the obligations, the reporting obligations under this statute. So we're going to go over that today in some detail so that you are prepared to comply with the reporting requirements that are in effect and are due on January 1st, 2025. Next slide, please. So the Corporate Transparency Act became effective January 1st of this year, and its intent is to aid law enforcement in combating illicit activity that's conducted through anonymous shell companies, and it requires privately held companies to report the beneficial ownership information, BOI. You're going to hear BOI. So that means beneficial ownership information to the U.S. Department of Treasury's Financial Crimes Enforcement Network, the FinCEN. So you'll hear me refer to FinCEN throughout the presentation. And it doesn't mean that you're doing anything criminal. This is just a reporting database to give certain information so that FinCEN knows who are the beneficial owners of a particular entity, legal entity. And so this really applies to, there's some exceptions that we're going to get into, but it applies to small companies that really the only compliance, federal compliance law or obligation they've ever really had to do is file their taxes every year. So this applies to them. And this is why we're doing this presentation. Next slide. So what does the CTA, why are they doing this? And it basically aims to curtail, limit money laundering and other illegal activities by entities that use, LLCs and corporations and anonymous shell companies.
And I have multiple business account with you.
Otherwise, federal reporting requirements and other federal statutes. Next slide. So we're going to go into what are the reporting companies. So a reporting company will be you, small company, unless you're exempted, and what information that you have to report about the beneficial owners of the company and what the company has to report. So you got the beneficial owners have to produce certain information and the companies have to produce certain information unless you're exempt. And we're going to get into which companies are exempt. We're going to get into also the requirements that if there's a change, let's say you already did your reporting obligations, but if there's a change in the ownership of the beneficial owners of the company, then you need to report that change as well within a certain deadline. And also, we're going to get into more detail, who's a beneficial owner and what steps you need to do to comply. Next. And so this law applies to both domestic and foreign companies that can be a reporting company under the CTA. So domestic reporting company is any company that was formed, that you formed in the United States and any of its territories or districts, including Puerto Rico, Northern Mariana Islands, Guam, the US Virgin Islands. If you formed an entity in any of those jurisdictions, you are considered a domestic reporting company, as well as Indian tribes as well. If you set up your company with an Indian tribe reservation, then you still have to report. Next. Foreign company. If you're a foreign company formed in another country, but you registered to do business in New York, in New Jersey, or any of the states or entities or territories that I mentioned, you also have to report under this law. Next. So there's certain categories of companies that are excluded from reporting. So first off, the statewide Hispanic Chamber of Commerce is a nonprofit entity. They do not have to report. So tax exempt companies generally do not have to report. Large operating companies, public entities, inactive entities, and there's a whole list, the statute, there's a list of 23, and this slide goes over some of the other ones. So these entities are exempt because they otherwise have extensive reporting duties and obligations to the government that the government already understands and knows who are the beneficial owners of those entities or their other statutory or regulatory obligations that limit their capacity for money laundering and the illicit activities that the CTA is trying to prevent. Next. Oh, you went past one slide. If you could go back, please.
Wait, am I supposed to go back? I'm sorry.
Yes, back one slide, please.
Okay, sorry about that.
And go to the next one after this, if you don't mind. Okay. So, so we went over some of the exemptions. So these are some of the other exempt companies or exempt entities that do not have to comply: banks, credit unions, security brokers, from financial market utilities, regulated public utilities, because these entities are highly regulated already. Next slide, please. So what does a reporting company, what do they have to disclose? They have to disclose their individual beneficial owners, and for entities created on or after the effective date, the company applicants. So basically, the effective date is January 1, 2024. If your company was around before that time, you have to disclose who are the beneficial owners and disclose certain information about the beneficial owners, and the reporting company has to disclose certain information to FinCEN. If the company was formed after January 1, 2024, then the individual or entities that reported or created that company has to do the reporting, and they have to do it under a certain period of time. Next. So as to each individual beneficial owner and the company applicant, right? So those are the two categories. If you created the company before January 1, 2024 or afterwards, these individuals have to disclose their full legal name, date of birth, their complete current address, a unique identifying number and an image of the document with that unique identifying number. And I'll get into that in a bit. Next slide. So unique identifying number must come from one of the following non-expired documents issued to the individual: a US passport, a state, local, or Indian tribal information document issued to the identity of the individual, state driver's license, and if the individual does not have any of the above, a passport issued to them by a foreign government. None of these documents can be expired. If they're expired, then that document cannot be used as a unique identifying number. Next. The reporting company must also supply information. So the company has to supply information about itself, and then the company has to supply information about its beneficial owners. So the company itself has to provide specific information to FinCEN, and they have to do that by the effective date in terms of which information they produce. They have to produce their legal name, their trade name, their DBA, if they have a DBA, on which it conducts business, whether it's formally registered or not, you have to supply that information. The company's current address and its state, tribal, or foreign jurisdiction of formation. So if you formed an LLC in New Jersey, you need to produce the information that you're an LLC and it was formed in New Jersey, and your IRS tax ID number, including employer identification number, has to be produced to FinCEN. Next. The reporting company, again, we've gone over these dates. So before the effective date, right? If your company was formed before January 1, 2024, you have until January 1, 2025 to file this information about the company's beneficial ownership interests. All right, so that's less than 2 months from now. If your company was formed after January 1, 2024, then you need to report this information within 90 days of its creation. Okay. And so if you haven't done that already, certainly, and you created your company after January 1, 2024, then you may have some compliance requirements, and we'll get you some information towards the end of the slide on how to get that done. And of course, if you have a company attorney, you should contact that person after this so that you can comply with that requirement. Next. So reporting company has 30 days to report any changes. So let's say you already reported, and you did it already. If there's any changes in the ownership interests of the company, let's say you have an LLC with 3 owners and one owner either passed away, sold their shares in the company, or something happened that there's a change in the ownership interests of the company. When that happens, you have 30 days to report that change to FinCEN, all right? And you also have an obligation to report any inaccuracies of information that you already reported once you become aware of that inaccuracy or you had reason to know of that inaccuracy. So there's an ongoing requirement that you and your company should set up a policy so that whoever is the secretary of the company or whoever is the CEO or the president understands that this is an obligation that's ongoing. Once there's a change in the ownership interest in the company, you have an obligation under the CTA to report that change within 30 days. Next. So this law does have some teeth in terms of penalties. There are both civil and criminal penalties for violating the CTA. including a fine up to $10,000, imprisonment up to 2 years, or both, for any person who willfully provides or attempts to provide false information or fraudulent information about someone's BOI, failing to report complete or updated BOI information to FinCEN. And also, penalties may also apply to the reporting companies and individuals who cause a reporting company not to report, or are senior officers of a reporting company at the time of its failure to accurately report or update BOI information to FinCEN. So this law does have teeth, so please understand what your requirements are and make sure that if you haven't already done your reporting, to do so before January 1st, 2025. Next. There is a safe harbor that I mentioned earlier before, which is kind of an excuse that if a reporting company with reason to believe that its BOI report contains inaccuracies, they should file a corrective report within 30 days of when they become aware of that inaccuracy or have reason to know. And so if you do that and send that report, then that will be a shield or a safe harbor from non-compliance with the law. Next. Beneficial owners. So I talked about so far a lot about beneficial owner. What's a beneficial owner? We're going to get into that now. Next slide, please. So a beneficial owner is any individual who directly or indirectly, one, exercises substantial control over the reporting company, or owns or controls 25% or more of the ownership interests of the reporting company. Exercises substantial control or owns or controls 25% or more of the company. And then we're going to get into what that means with these other slides here. Next. And substantial control. What's substantial control? It's an individual. When an individual exercises substantial control over a reporting company, that individual does the following. Either they serve as a senior officer of the reporting company, has authority to appoint or remove any senior officer, or a majority of the reporting company's board of directors or similar body. There's someone who directs, determines, or has substantial influence over important decisions made by the reporting company, and has any other form of substantial control over the reporting company. Next. So senior officers, we're talking about the president, chief financial officer, general counsel, chief executive officer reporting, chief operating officer, or any other officer, regardless of the title, that performs a similar function to these officers. Next. So what does it mean by having substantial influence over important decisions? Well, some of this, I guess, is common sense, but important decisions of a reporting company under the CTA means those concerning the nature and scope of the company's business, selling or leasing principal assets, making major expenditures or investments, issuing any equity in the company, incurring the occurrence of significant debt, and selecting or terminating business lines or ventures, or geographic focus of the reporting company. These and the many others, depending on the setup of the company, that constitutes, what it means by making important decisions. and having substantial influence over those important decisions. Next. Important decisions may also include approval of the company's operating budget, compensation schemes and incentive programs for senior officers, and entering into and also terminating significant contracts, and amending of the reporting company substantial governance documents or significant policies or procedures. So if they have the power to influence, for example, how you amend the operating agreement or the bylaws of a company, that is an example of having substantial influence over important decisions of the company. Next. So in terms of substantial control may also include being a representative of the board, being on the board, but being a director by itself is not determinative. They could also own or have a controlling majority of the voting power or voting rights of reporting company, and may have certain rights associated with any financial arrangement or interest in the reporting company. Next. Substantial control and the exercise of that may also include control over one or more intermediate entities that separately or collectively exercise substantial control over the reporting company. So the example for that is, let's say you have an LLC that is controlled by a parent company, right? And then you have beneficial owners of that company may have substantial control over the subsidiary, right? So you got to think of those terms. So that will constitute this example of substantial control. Also, arrangements or financial or business relationships, formal or informal, with other individuals or entities acting as nominees, right? If you have a complex ownership structure that includes nominees, that may also be considered substantial control, as well as any other contract, arrangement, understanding, relationship, or other exercise of control over the decisions of important decisions of the company. Next. So again, this is all about what constitutes a beneficial ownership interest in the company, right? And I think you're getting a sense of who those individuals are, right? From all of these examples of whether or not they exercise substantial control over important issues of the company. The final rule that was created for the compliance for the CTA also defines ownership interests very broadly to include the following: regardless of whether the interest is transferable, classified as stock, or some other similar instrument, or confers voting power or rights. So if you have any equity, any stock or similar instrument, any pre-organization certificate or subscription, any transferable share of voting trust certificate or certificate of deposit for an equity or equity security, an interest in a joint venture, a certificate of interest in a business trust. These all can be considered under the rule ownership interests that will be subject to the CTA. Next. So also remember that an individual may directly or indirectly own or control an ownership interest through a contract, arrangement, understanding, relationship, or otherwise, including joint ownership with one or more persons. A nominee, intermediary, custodian, agent, ownership or control or more intermediary entities. So if you have a bunch of LLCs that have an interest in each other, if you have that type of setup, then This is going to be a little more complicated in determining what your reporting obligations are. And the suggestion is definitely to get your team together if you have not done this reporting, to get the information, determine whether you are or who are the BOIs in the chain of these entities and whether you have a reporting obligation or not. And of course, if you have a company attorney, to contact them. Next. An ownership interest in a reporting company may also be held through a trust. And the following individuals under the rules will be deemed to have an ownership interest in the reporting company. So if you're a trustee of a trust, if you're the beneficiary of the trust, if you're a trustee and you have the authority to dispose of the trust's assets, right? That's considered having an ownership interest. If you're a beneficiary who is either the sole permissible recipient of the trust income and principal, and you have the right to demand distribution of or withdraw substantially all of the trust assets, then you have an ownership interest. If you are a grantor or settler having the right to revoke the trust or otherwise withdraw the trust assets, you have an ownership interest. And I think you get what's happening here with this law here. They're trying to prevent different mechanisms that people may use to shield their ownership interest in companies in order to reduce any type of illicit activities or criminal activities. Next. So how do you calculate that 25% ownership interest and control? So an individual's total ownership interest that they own or control directly or indirectly are calculated as a percentage of the total outstanding ownership interest of the reporting company. At the present time, with any options or similar interests being treated as exercised, right? And so certainly if there's a capital or profit interest or issued to entities that are taxed as partnerships, the individual's ownership interest or their capital and profit interest as a percentage of the total outstanding capital and profit interest. And again, get your accounting team here to do these calculations as necessary in order for you to come up with who has a 25% ownership or control threshold for reporting purposes under the law. Next. So for corporations, entities treated as corporations for tax purposes, and other reporting companies that issue shares of stock, the applicable percentage is the greater of the total combined voting power of all classes of ownership interests of the individual as a percentage of the total outstanding voting power of all classes of ownership interests entitled to vote. The value of the individual ownership interests as a percentage of the total outstanding value of all classes of ownership interests. And here is the catch-all, right? If the calculations cannot be made with reasonable certainty, an individual owning or controlling 25% or more of any class of type of ownership interest of stock or whatever you want to call it, of a reporting company will be deemed to have exceeded that 25% ownership or control threshold. So it's really important that you and your team understand that and that there is this catch-all provision here that they're going to treat it. And if you have any issues with this, certainly reach out to your attorney to make sure you understand how to calculate this 25% ownership interest threshold. Next. So there's some exemptions as beneficial owners. There's 5 categories of individuals that are exempt. So minor children, that makes sense. Individuals acting as a nominee, intermediary, custodian, or agent on another's behalf. Certain employees who are not senior officers, heirs, and certain creditors of a reporting company are not considered to be beneficial owners and are exempt from the reporting. Next. So complying, what do you got to do to comply? Next slide. To comply, the company must be able to determine the individuals who are its beneficial owners, and we went through that information in some detail. Timely obtain the required personal information of its beneficial owners so the company can meet the CTA reporting deadlines. Now, that should be pretty easy for most companies where there's only one or two owners, or three or four. That will get complex when you have an LLC, for example, that has 100 shareholders, and you got to get that information from the 100 shareholders. But for most small and mid-cap companies, where you only have a handful of owners, that should not be a problem. And to be promptly notified of any change in the beneficial owner's required personal information so the company can timely report that change to FinCEN. That's going to be an issue because people may not remember that they have that obligation. And so it's important to write that policy down as part of your company policy to review. Anytime there's a change of ownership, you have an obligation to report that change to FinCEN. Next. So in determining who are the beneficial owners, an individual may indirectly own or control an ownership interest in a reporting company through ownership or control of one or more intermediary entities. So if your company is controlled by another company, a parent who's controlled by another, then it's going to be a little complex in getting the information necessary. And so you may need to look at the company's governing documents, operating agreements, bylaws, stock agreement, shareholders agreement. They usually have provisions that the members of who have that equity in the company, the owners, have to cooperate with the company in discharging its compliance with the law. They usually, most of these documents have that information. And so if you have a situation where you have a beneficial owner at the 25% interest or more, and they don't want to cooperate with you, you may want to look at some of those documents that obligate them to cooperate with you in compliance with the CTA and other laws. Next. And so to meet the CTA's filing deadlines, again, January 1, 2025, you need to obtain all of this personal information from the beneficial owners. And also, you need to get this information to report a change of that personal information. So let's say, for example, you have an owner who moves. Their address moves. They move from state to state. You have an obligation to report that change of address to FinCEN, right? And so you need to collect this information and make these individuals aware to let you know when they move, so that when you know when that happens, you have 30 days to report that change to FinCEN. Next. So owners, management, and other persons that may need to give a reporting company personal information should be required to provide the information and updates with enough time for you to review and send that information to FinCEN. And again, look to some of the company's governing documents that will help you remind these individuals that they have to comply by this law, and they got to comply by the company's governing documents and cooperate with you to get this information. Next. So how do you actually do the reporting? So this is an important website. If you write down anything from this presentation, write this down. This is the FinCEN website. where you could do the reporting online. And the address is fincen.gov/BOI. It's a very user-friendly website. There's lots of information. There's a FAQ page. There's also a chat feature here. You could chat with someone from FinCEN to help you out. And once you get all this information ready and you're ready to report, there's a filing capability to do the BOI e-filing system directly from this website. And if you need any additional information, this website also has like a 5-minute overview of the statute and how to report through their website. And it's very friendly. We've used it before. And if you get anything from this presentation, please record this information. And if you have not done your reporting, this is going to be the main site that you use to do that reporting and get information. If you have a highly complex ownership interest setup with your company or set of companies, then certainly, and if you haven't done the reporting so far, and you determine that you have to do a reporting between now and January 1, 2025, please contact your company attorney so they can help you out with this compliance obligation, because the deadline is coming up. It's less than 2 months, and there are penalties for willingly not complying with this law. And so that is my presentation. I know that Luis has his hands raised.
Yes, Marco. Will it be possible that we do a summary in Spanish? I mean, I understand this is a requirement. Companies that are money serving institutions are familiar with this because they have been doing this for a long time. But basically, this new law requires that every business report the ownership, right? It's like they are a financial service or a money serving institution, and they are expecting that everybody provide that certification. But that will be possible? Something small?
You could contact me offline and we could see if we can, what I think a good step would be to translate this presentation that I did, the PowerPoint into Spanish, and send that out and have it as a resource for chamber members. I think that'll be a good first step. And I will find out if the FinCEN has a Spanish version of their website as well.
Sí. Pero es importante que sepan que el deadline es el 1 de enero, ¿cierto? Dependiendo si la entidad fue constituida antes o después de enero del 2024, y que en algunos casos tienen 30 días y en otros 90 días, pero que es un requerimiento que hay que cumplir. Así que pónganse las pilas. Si necesitan ayuda, deben pedirla. Pongan los comentarios si quieren que se resuelvan algunas preguntas o algunas inquietudes que ustedes tengan ahí en los comentarios, y pidan pues que les demos no la asesoría legal, pero por lo menos que los guiemos en el proceso. Lo más importante es estar atentos de que hay una fecha límite y que todas las entidades están requeridas a cumplir ese requerimiento.
Thank you, Luis, and thank you, Jairo and Daniela, for your time. And I hope everyone can look at this and exercise their compliance obligations before January of next year. Thank you.
Thank you.
Thank you, Marco.
Thank you. Thank you, everyone, for participating. Have a good day.
Bye-bye.